Hello and welcome. My name is Steve Bennett and I'm the CEO of the Direct business at Charter Hall. Today's short video is on the Charter Hall Direct Industrial Fund No. 4. The aim of the video is to provide you an update on the fund and its key statistics, and also to give you some more information on the major liquidity event which closes on the 20th of December 21. So let's just jump right into it. The Charter Hall Direct Industrial Fund No. 4 is a $2.3 billion diversified fund focused on the industrial and logistics sector in Australia. It's delivered a 25% return in the 12 months to 31 October and a 12.3% return since inception. The current distribution yield is 5.2%, and the fund benefits from a strong occupancy and long-term weighted average lease expiry. The slide on the screen shows how well the fund's diversified, both in terms of tenant diversification, where the top 10 tenants comprise 53% of the net income, as well as geographically diverse across Australia. We recently commissioned a research report from CBRE to help investors and advisors decide what they'll do as part of the liquidity event. CBRE believe that the sector still has strong growth ahead of it, driven by strong fundamentals in the Australian economic sector, the demand for industrial logistics assets from an investor point of view, as well as the tailwinds that you get from the e-commerce sector. If you'd like more information, please do go to our website where that CBRE report is available. So what is the liquidity event? Well, DIF4, just like our other open for investment funds, has rolling 5-year liquidity events. DIF4's begins on 1 November and finishes on 20 December. It's an opportunity for all investors to reconsider what they'd like to do. It's up to each investor and client, and you can choose between redeeming in full, partially redeeming, or staying invested for a further 5-year period. For the majority of investors who will choose to stay invested, you do not need to do anything in relation to the forms and letters that we've sent out to you recently. So up on the screen, you can see the options that are available to you or your clients. As I've just said, if you want to stay invested, no further action is required. If you'd like to redeem, please do fill out the redemption form that would have been mailed with your letter. You also have the ability, if you wish to exit some of your funds and roll them into another product, there is a reinvestment form available as well. And finally, if you're unsure what to do, we encourage you to seek financial advice. Unfortunately, at Charter Hall, we are unable to provide personal or taxation advice to investors. So what is the fund strategy of DIF4? Well, a couple of things to note. It is not changing from when you originally invested. The fund will continue for a further 5-year investment term. The fund aims to deliver income consistency as well as the potential for capital growth. It does this by investing into a high-quality portfolio of Australian industrial and logistics assets. It benefits from the acquisition pipeline of the Charter Hall Group, as well as the large transaction and acquisition capability that we bring. We will also rebalance the portfolio. That means sell assets where we believe the risk-adjusted returns have been maximised for investors. So what are the key dates that investors and financial advisors should be aware of? Well, the liquidity event opened on the 1st of November and will close on the 20th of December. This provides ample time for investors to read the letter that we've sent to everyone, as well as get up-to-date information from the fund's website and/or to consult your financial advisor. And whilst the PDS does allow 12 months to deliver the liquidity, we fully expect to pay out all redemption requests in Q1 2022. This is, of course, subject to the quantum of requests, but based on the discussions we've had with some of the largest investors, we're very confident that we can deliver that liquidity in Q1 next year. So what is the unit price investors will receive? Well, we independently valued the entire portfolio at 30th of October. It resulted in a significant uplift in the unit price to $1.29. Ultimately, though, the unit price will be set based on the day before investors are redeemed. As I said, expected in Q1 next year. So if management do believe that the properties or the entire portfolio should be revalued, we will of course do so. There are other assets and liabilities that feed into the forecast, but as we stand here now, the latest unit price is $1.29. There is also a 2.5% sell spread that comes off your exit price. This sell spread is not paid to the manager, but remains in the fund. It's so that all investors, including exiting investors, share in the future disposal costs of assets. And to make this easier and for illustrative purposes, an example is provided on the screen showing how the 2.5% works. So you can see up there on the screen an example of the unit price and the application of the sell spread. I'd also encourage you to go to charterhall.com.au/DIF4 for the latest available unit prices. The other thing to note is that the 6-monthly limited withdrawal offers will continue, but the word there is limited, and we always encourage you to read the PDS for further understanding on how they operate. Thank you for watching this short video on an update on the DIF4 fund and how the 5-year liquidity offer works. Up there on the screen are key members of the team who you can reach out to and contact should you have further questions. But remember, Charter Hall and our team are unable to provide personal financial or tax advice. Thank you very much.